gains this morning, clearly led by the Hong Kong markets.
This kind of a technology transfer has not happened between US and any ally.
18,464 basically is the level which the market must protect.
The projects would actually entail an investment of close to 27,000 crore.
The company in the month of May has grown its premium by about 21% on a year-on-year basis.
According to Motilal Oswal, this presents an attractive buying opportunity. They see a scope for re-rating.
The bell strikes, and in fact, we open up with a gain of close to 60-65 points. So it's a little tricky, actually.
One has to marvel at the kind of free cash flow generation capability that these IT services companies have. Valuations are not that expensive.
Historically, India has delivered the highest proportion of multi-baggers.
We are expecting policy easing to support growth in the second half.
Mid-caps are doing very, very well. The mid-cap index is up close to about 0.9%. The small-cap index is inched towards a 1% rally.
All the models are indicating there is a very strong possibility of El Nino.
The Monetary Policy Committee may continue to maintain status quo with inflation moderating well into RBI's comfort zone.
Tracking for you for the markets, it's really the mid-cap index which is seeing a lot of action.
Well, that was the day so far. It's a fantastic Wednesday. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Last hour of trade coming up. Things are looking good. I'm Prashant. With me, my colleagues Rima and Nigel here in the studios. Guys, hi, afternoon.
Hi, afternoon. Looking very, very good, right? 18,700. Who would have thought?
Who would have thought? I don't think anyone thought.
Because till morning we were saying, oh, we're stuck in such a tight range and, you know, it's not breaking.
Yeah. And this comes right before the RBI policy tomorrow, right? So markets...
But banks are underperforming. So banks are not that sanguine.
Yeah. And, you know, we'll talk about the granularity of it in just a bit. But the fact is, I mean, we are up, right? I mean, now with this 100-point gain, and it is a 100-point gain now, we are, I think, 200 points away, less than 200 points away from the all-time high. 18,887 is that high. I mean, so basically one more day, 1.25%. If these gains hold, and you're there on the Nifty. That's the long and a short of it. As I said, in terms of what's moving, etc., we'll get to in a bit. I also have to say that small caps and mid caps are doing very, very well. I mean, the small cap index actually is up over 1%. The mid cap index is up just under 1% or so. The Nifty is also trading above its the swing higher, the 30th of May. 18,662 was that level, and we're now almost 40 points above it. The same level, the swing higher for the Bank Nifty, which was again made on the 30th of May, was 44,500. That is still about 300 points away on the Bank Nifty. 50% of the Nifty gains are coming from these 5 stocks. Infosys, there is TCS, Bharti, Reliance and L&T. These are the 5 names contributing to the bulk of it. And of course, we'll talk a great deal about what the RBI can or cannot do, will or will not do in its decision and its policy decision tomorrow. Guys.
Hi, now the Nifty, after conquering 18,700 or at least touching it today, is less than 200 points away from that all-time high level of 18,887. So, Dilli dur nahi hai, as they say now, even for the benchmark index.
You should put it up on the...
We'll be putting 18,700. It's too soon to say count.
Dilli dur is a good one.
But let's, banks are a bit subdued, right? They're not participating today. So, the Nifty banking index is only up close to about 0.1%. So ahead of the RBI monetary policy, you've got the main chunk, the segment, the financial segment, most linked to the interest rates. That's a bit subdued in trade. Look at individual names like Kotak Mahindra Bank, ICICI Bank. They are struggling in trade. On the other hand, Axis Bank has been a rank outperformer. So it's setting itself apart from the rest. This week, Axis Bank has gained close to about 5% plus, 5.2%, when Kotak and ICICI have done absolutely nothing. So Axis Bank is putting in some outperformance. And today, the day belongs to consumer names. So Britannia, Tata Consumer, Nestle, all hitting highs.
Well, indeed. Before we get to the market action, we are going to be focusing on the World Test Champions, the final as well. India's won the toss. We're elected to bowl against Australia. So let's see how that goes. Little pressure because we'll have to chase in the 4th innings. But that's what we have selected. So we'll get an update in just a bit. That was running for you at the bottom of your screen. Just focusing on the market action. 2 quick points. One is the PCR that was hovering around 1. It's moved to around 1.26. That's because put writing has come back into play. 18,600, 18,650, a fair bit of open interest build up out there. And that explains why the PCR now is moving back towards the upper end of the range. Remember, we've seen it move to around 1.38, 1.39 odd, and from there it sees some bit of a pullback. So currently it is around 1.26. The broad range has been 0.7 on the downside to around 1.4 on the upside. But how do you position yourself in the final hour of trade? Rahul Mohinder joins us to tell us exactly that. Well, Rahul, it appears, the bulls got fed up of us saying that we're in a range. Seems to be a bit of a breakout, preempting what the RBI governor is going to do. Your take on the index?
Absolutely. I think it was just about, probably two and a half months ago that we were, sub 17,000 even. Nobody thought that we'd have this kind of a rally. And, this rally hasn't been a straight line up. We've had its little peaks and troughs. And, that's where retail has all the, complaints that, we didn't feel this, although we're almost edging to that high point. But I think, yes, all eyes are on 18,900, clawing that level, breaking out of the previous one and heading higher. And I think we're in a good setup right now to probably do that. And that's clearly because today, when you look at index heavyweights, there are some very clear signals. And, that's where I get the sense that, if someone really had to put a question to me as to will we cross it, I'd say a yes. And my answer would be that how far can we go? And this is not short term. This is not a June, July kind of call, but I think we could head as high as 19,600 in a couple of weeks. So I think we have that trajectory. What we need to kind of look forward from here is, can we continue to hold a level of 18,450? That's very important on the Nifty spot. Yes, 18,900 is that minor hurdle. But coming to stock specifics, what could be those stocks which help the index? And, today my stock calls are going to rotate around that whole fragment. And ITC is one of those stocks where you've seen a little bit of, a consolidation over the last couple of sessions. And I think 438 is almost an established short-term base. So if you keep a stop loss below that, we could head to newer highs, at least 455 to 458. That's the kind of benchmark target I'd work with. Infosys is trying to make a good comeback, and I think keep a 1280 stop loss. Bit of a risky and aggressive take here, considering the entire setup, but I still feel 1280 being a stop loss. One could look at a good move. 1305 would be its first hurdle. As soon as we clear of 1305, I think that's when the trajectory really moves in. 1330 would be my target on it finally. Reliance Industries, again there, I feel we're kind of moving from a consolidation out. So, keep 2460 at the base level as a stop. That's a decent support to be working with. 2520 target one, clear that. We can even get to 2550.
Okay, thank you very much for that. We'll come back to you. For now, let's talk about Strides Pharma Science. That's buzzing in trade. The company reports record US business revenue in FY23. Q4 margins are at a multi-quarter high. Ikta's here with the details.
Thanks for that. Well, yes, Strides Pharma is in focus today, so there's no real incremental news. I've worked the phones and most of the people that I spoke to said that there is no fresh trigger for Strides. It's probably seeing buying post the Q4 numbers, which were extremely healthy. So a couple of highlights from the quarter gone by as well as FY23. US sales were above $60 million for 3 consecutive quarters for the company. The other regulated markets, the revenue stood at $48 million. It was the highest ever quarterly sales recorded for the company when it came to regulated markets. Margins at 15.8% in Q4 was at multi-quarter highs. FY23, US business recorded an all-time high in terms of revenue. It was up 58% year-on-year. FY23, other regulated markets was also in terms of record sales at $157 million, up 12% year-on-year. The total amount of debt paid by the company as a group stood at over 700 crores as well. A couple of triggers going forward. The guidance provided by the company was quite bullish. They expect the continuing business to grow significantly, emerging markets to grow faster, EBITDA of around 700 to 750 crores. This compares to over 400 crores in FY23. They expect to reduce debt by another 500 odd crores. And over overall Strides net debt is expected to be less than 3 times. Now, Stelis, which is basically their biopharma R&D arm, the company is looking at strategic options when it comes to Stelis. They are anticipating an EBITDA positive in FY24, profit positive in FY25. For Stelis, they have indicated the restructuring we could probably hear on it by Q1 of FY24. So that would be an immediate trigger that the street would be watching.
Okay, all right. Ekta, thanks a lot for that. Stock is up close to around 9% odd. Gurmeet Chadda, Managing Partner and Chief Investment Officer at Complete Circle, joins us on the show as well. Hi, Gurmeet. Good afternoon. Thanks so much for joining in. Well, you heard what Ekta had to say on Strides. That stock is a bombed out stock, actually. It was nearly around 1,000 rupees. It came down. But as Ekta mentioned, there is some guidance that they're giving. They're talking about reducing debt, EBITDA number moving to more than 700 crores from around that 430 crores odd. Your view on the stock, if at all, and from the Pharma pack, what do you like?
So I think the results were very good. I think they surprised the market. With almost 13-14% growth in top line. US business was almost 500 crores out of 990 odd crores a date. And they did well across regulated markets. Also, I think what probably got the street now more positive is the margin guidance. They are saying that they'll come back to the 20% plus margin, in the short to medium term. And currently they ended the year at about 10-11%. So I think that's something which is leading to, if I can use that word, re-rating and the movement we have seen in past few weeks. We continue to keep track. We like Pharma. It's right now 3% of Nifty. Weightage is really low, very underrepresented. So we are more constructive on branded generics as a category. We like some hospitals, some niche hospital names also like Renewable, other than the integrated hospital names. And for the long run, which is 5 years plus, we are more interested in the CDMO names. And we are seeing now bottoming out, playing out that as well. We saw how Newland and Syngene did well. I think something similar will happen to the likes of Laurus, TVs, etc. as we move forward. But the horizon has to be very long.
Okay. Oil marketing companies, Gurmeet, stay with us. Just coming back to you. But OMCs are making their presence felt today. HPCL, BPCL are surging, anything between 4 and 5%. Sonal is here to tell us what's going on. Sonal.
Well, the fact that the marketing margins, they are making new highs is what's driving oil marketing companies' stocks this time around. Now, the crude basket is priced at around $110 per barrel, but OMC should recover more than their pre-Ukraine war book values over the next 2 months, is the word coming in from Morgan Stanley. They are positive on the likes of IOCL and BPCL. Remember, Q4 was really strong across the board for these oil marketing companies, led by the refining segment. But now, there is an expectation that the marketing segment will also do really well. However, despite the moves that we are seeing, multiples are still below the mid-cycle returns. This is despite the earnings tailwinds that Morgan Stanley is talking about in their marketing segment. The integrated margins in their marketing segment is at the highest ever level. This is because despite the fall in crude prices, there has not been any cut in petrol and diesel prices, and that has led to higher marketing margins for these companies. And this should help them recover the losses that they saw in Q3. And Q3 losses were huge, both in the refining and the marketing segment for the companies. Now, even if the oil prices remain above the $80 per barrel mark, there is enough cushion for these companies to make profits in the marketing segment. This will reduce the need for government support budget that they had announced, around 30,000 crore rupees for these oil marketing companies. And current crude prices at these levels, around $75 a barrel, also provides a support for possible cut in petrol and diesel prices to the tune of 2 to 5%. If that doesn't happen, then marketing margins, of course, will remain at elevated levels, and that is the next trigger for this sector in general.
All right, Sonal, thanks very much for that. Gurmeet, I have a feeling you're not a fan, right? Oil marketing companies?
No, Prashant, you got to be tactical here, right? I mean, because there's so much government intervention, and I think what Sonal made that point on integrated margins. So not only the GRMs are well, even on throughput, both the refining as well as marketing volumes have been good. Also, if you see BPCL, for example, there's one stock we track more for tactical purposes, that despite the losses and the under recoveries, the net debt only marginally went up 4-5%. So the balance sheet probably looks looks far in better shape. Also, at some point of time, probably while it's a long wait, at some point of time there will be some strategic divestment as well. And so that's something which we keep on the radar. But you got to have a trading view on it. But in the near term, possibly there could be some upside. We saw that in last quarter. Almost a 2-3 times jump in both EBITDA and PAT for BPCL. I think 11,000 crores or EBITDA, if my memory serves me right, and almost 7,000 crores plus PAT. So maybe in the near term, yes, valuations also being reasonable.
Gurmeet, do stay on. Tomorrow is the RBI monetary policy, the CNBC-TV18 poll, as well as our citizens. MPC have unanimously forecasted a no rate action policy or a pause. But what else could be moving from the MPC? Lata is here with the editor's take. Lata.
Well, first up, for the stock markets, I think it is anyway a win-win policy, because there is a lot of expectation that the growth forecast, which now stands at 6.5, could be upped because of that extraordinary upside surprise in the fourth quarter GDP, or inflation forecast could be cut because there is a fall in the lower than expected inflation, which came in April and more likely in May. So for equity market, if both come or one of them come, either ways, it's a win-win. So there are no losers here in this market. But for bond markets, it's a bit nuanced. The bond market is more or less clear that there are no hikes, but they want it a little more concretized in the stance. Last time, the governor clearly said, I'm pausing, but it is not a pivot. A pivot means the next is a cut. But they will want to see whether he says that, reiterates that statement, or whether he tweaks the stance, which is actually we are withdrawing accommodation. If I'm withdrawing accommodation means I'm still likely to hike rates. They want to know whether they will change that. The market is more or less clear it's going to be a long pause, but does he change the language of the stance? Now, even this inflation cut is something the bond markets will watch out for. The RBI's current inflation forecast for April, May, June is 5.2, but April has already come at 4.7. The expectation is that May also is going to be 4.5 or 4.6. So if they reduce Q1, which they have to arithmetically, the full year also goes down. But if the full year goes down from 5.2 to 5, there won't be much of a Diwali. But if it goes even below that, then that market also will jump a lot. That market has factored in a bit. The bond market, after all, the yield has fallen from something like 7.45 all the way to under 7. So some of it is factored in, but even then, below 5, but one doesn't know whether the RBI with an El Nino worry would do that. The big worry for the bond markets, or big ask, would be what does he say on liquidity? They're already puzzled that if you are in a withdrawal of liquidity mode or withdrawal of accommodation mode, why did you ask for exchanging the 2,000 rupee notes? Because that has brought a gush of liquidity. How is that withdrawal of liquidity? It is contradicting. So they would want to also know that RBI is very concerned that liquidity has suddenly become so plentiful. They're doing what is called variable rate reverse repo to pull out the liquidity. Okay, you are unhappy with too much liquidity. Will you be equally unhappy if liquidity becomes very tight? Will you do a CRR cut later on in the year? Would be some questions. I don't expect the governor is going to answer all that because of the uncertainties around. But for the bond market, all the good news is factored in. So, if they cut inflation to 5, it's in the price. If the stance is unchanged, they will actually sulk. There are reasons for the market to sulk, bonds to sulk tomorrow, but for equities only to rejoice tomorrow.
Okay, all right, Lata. Thanks a lot for that. For the time being, though, we'll slip into a short break. On the other side, we'll be joined by Rupen Rajguru of Julius Baer. He'll be joining to give us his view on the market. Stay with us.
My journey of insurance and investments began at the same time, when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ.
10 साल हर हाल। आगरे के पेठे को मदुरई को चखाया है।
सर इधर पेठा
नन्ना इருக்கு।
जयपुर की जूती न्यूयॉर्क को पहनाया है।
अमेज़न क्लिक करो, अभी दाल टाइप करो, तुअर दाल ना, अच्छा ठीक है, तूर दाल टाइप करो।
80 साल की उंगलियों की उंगली पकड़
अब सेलेक्ट करो।
टेक्नोलॉजी पे चलना सिखाया है।
ऑर्डर करा,
ऑर्डर दे दिया और कुछ?
वाह वाह।
तुम्हें और नीचे चलो, ऊपर चलो, ऊपर चलो।
टेक्नोलॉजी को मैंने अपनी भाषा में बोलना सिखाया है। देखे हैं हर हिस्से के किस्से।
Alexa, tell a bedtime story.
Okay.
आने वाले कल से रोज रोज बतियाया है। हर दिल तक पहुंचने का मेरे दिल ने रास्ता बनाया है। 10 साल में साथ मिलकर कई मंजिल पाई हैं। अभी तो बस पहला कदम बढ़ाया है। अपनों ने मिलकर बनाई है अपनी दुकान।
मैंने अमेज़न बनाया है।
अमेज़न, इंडिया की अपनी दुकान।
Welcome back. Holding above 18,700 in the Nifty, it's a century, while the sensex has gained 250 points. Let's talk about Torrent Power. That's the one which is surging in trade after the company signed an MOU with the Maharashtra government for 3 hydropower projects. Vivek is here with the details.
Well, that's right. The stock is in focus. Now, one of the concerns, whenever you speak about renewable energy has been storage. And a lot of companies, a lot of analysts have been pointing out to the fact that pump storage would be something that will be very important, especially, and they were all waiting for the kind of announcements that Torrent Power has made. We also had NHPC make a similar announcement some time ago. But what has Torrent Power done? The company has gone ahead and signed an MOU with the Maharashtra government. This is for 3 pump-staged hydropower projects, and the total capacity of all of the MOUs would total up to around 5,700 megawatts. A capital-intensive project. The capital outlay is almost 27,000 crores, and the company intends to execute these projects over a period of 5 years. Now, what is important to note is at this point of time, it's still an MOU. We'll be waiting for the letter of award to come, and what exactly is the final details that come in terms of the opportunity size as far as Torrent Power is concerned.
Okay, thank you very much for that. Gurmeet, do you like Torrent Power? Is this a story that you are fond of?
We have Tata Power in the portfolio. Torrent obviously is part of our reference list, and these kind of announcements it would take time to fructify. Obviously, market has reacted positively. Tata Power being more integrated player on traditional energy, has a very nice new energy portfolio. More than 30% market share in solar panels, market leader in EV charging is concerned. So I think energy overall, I think requirement is also proxy to how the investment cycle plays out and the revival of manufacturing which we are seeing. So that's something which is in our book.
All right, that's Torrent for you. Gurmeet, what else is sort of interesting you and your team out there in terms of stocks? Actually, it's that kind of a market once again, right, where the pace of moves is so large that by the time you look at something and get interested and do your work and homework and come back, the price is not where you started at. But what are you and your team doing?
So Prashant, this is right actually, and I'm a great fan of that saying that more money is lost waiting for corrections than actual corrections themselves. And because the price action is so swift that best of the gains can come in few trading sessions. We are liking the rural economy now focus. You see, there's a huge announcement. I think one of the largest MSP increases in the kharif crop, whether it is paddy, groundnut, pulses, etc., was expected. After the Karnataka elections and rural economy being soft. So I think with more state elections this year, in run-up to general election, you will see more focus on rural economy. So I think HUL is due in FMCG in terms of I think the way other stocks have run up, whether it's Tata Consumer or ITC, and I think HUL is due. Prashant, we really don't discuss distribution reach. India has 11 billion distribution outlets. HUL is present in 10 billion. Dabur is 5 billion, right? Just to give you a comparison. So, and I think if you see last year, they had a 4-5% volume growth, and on almost 80% portfolios, they actually gained market share. So with some volume growth coming back, margins getting better, I understand, the valuations are always expensive for HUL, but I think there's some, as far as that is concerned. We are also looking at some of the tractor makers, which are again rural focused, some of agrochemical names. PI Industries again has been a very, very all-time favorite, very lucky in terms of being invested in it for a little over 7-8 years now. So these are some of the things which we like, which I think there is more upside. So being a little more rural focused and adding some bit of a capex flavor to the portfolio.
All right, Gurmeet, thanks very much for that. Mangalam had put out a piece, I think, last week talking about why perhaps maybe HUL's time to outshine ITC. And you're saying what rural is something that you are focused on. HUL perhaps is one of those ideas. Well, 115 points. So it's not as if, by the way, the 3 p.m. move, will we see a 3 p.m. move today as well? We'll see. But so far, with 4 minutes to go, things are absolutely steady. 18,714, 18,715 is where we're at. Rupen Rajguru is Head of Equity Investment and Strategy at Julius Baer. He's joining us now. Rupen, good to have you with us here. And thanks for your time. So you're focused on the one large sector, which is, still relatively down over the last 1.5 odd years or so. IT services, Rupen. And you're saying that it's time to buy the space. What exactly there? And just give us a brief sense on why you think so.
Okay, yeah. Hi, afternoon, Prashant. Typically what we have seen that markets usually at an overall level have cycles. Companies also, while there are structural stories, will always have cycles. And we have seen this story play again and again with many sectors, and IT also over the last 10 years. We have always seen, people writing obituary for the IT sector, and then we have seen a smart rebound, and nothing could go wrong 2 years back, and now probably everything that can go wrong, at least that is what people are fearing. The good part is that all the fears at least are known, are there in the price. The latest fear, the latest joker in the pack being AI, and to what extent AI will impact the Indian IT services. It's too early days. At a margin, historically, we have seen a lot of these big trends. The Indian IT services do tend to get benefited out of it. Who knows? There might be more business which the Indian IT companies will get thanks to the way the AI is. While there is always fear that AI will impact some of their basic business. But net, if I were to now invert and see that in the current price, probably, people are baking in the most conservative estimates. When the corporates met this quarter in the commentary, the memory of SVB and the First Republic was fresh in their mind. So the commentary also was pretty conservative. So net, what the point I'm trying to say is that now, because of the correction in last almost 1.5 years, the IT stocks have come to a level in which, their FCF yields is pretty attractive. Plus on the dividend yield, also they are looking pretty good. So in an environment in which we are at an all-time high market level, definitely there is a case of investing into IT, which probably I would say it's at its cyclical low, and that's the time at least I believe one has to buy into.
Rupen, I understand cycles, and over a long period of time, it's okay at what point you enter in. But do you think when it comes to technology, we're already at the bottom of a cycle, or we've just started the descent lower? We're at the beginning of the down cycle when it comes to IT. I get that eventually it will pick up, but just want to understand where we are right now in terms of the down cycle. At the bottom or at the early stages?
I guess I knew that, Rima. But I would say, so typically, while at least on the commentary side, we are clearly seeing, a bit of, discretionary spending wise, there is a bit, companies are not forthcoming. So if, to answer your question straight away, Rima, if US gets into a steep recession, then definitely this is the beginning of the down cycle, and we might see much more worse time. Do we see that in our base scenario as of now? The answer is no. But yes, if we will change our stance if we clearly see visible signs of US getting into a steep recession.
All right, Rupen, I'm not sure how big a cricket fan are you?
Yes, I think it's going to start, or it's going to just now the World Cup final. Yes.
Yeah. What do you think we're going to be bowling first? Which I don't think it's it's debatable given the overcast conditions. So hopefully our boys they bend their backs in there. But we have left out Ashwin. That's a little bit puzzling. We're going with Jadeja and we're going with 4 seamers. I mean, wow, any take on that?
I think just like markets, the recency effect, right? The way Jadeja played in the IPL final, so that also definitely would be playing in the mind of selectors, right? So everybody has this recency bias, I guess. That would have been the clincher for it.
All right, I think the first ball is going to be bowled, Rupen. It's a little bit of a debate out there on Twitter whether or not Ashwin should have made it to the top 11 or not, and he should have come in, and whether or not we should have played both Jadeja as well as Ashwin. Well, we'll know in the next 5 days or so, but for the time being, the bowlers have to bend their backs and, bowl the Australian team out twice. Rupen, let's get back to markets. You like a couple of domestic themes, autos as well as cement. How much of the good news is in the price? One encouraging aspect from the autos particularly is that two-wheeler sales are picking up now. That's something that we didn't see earlier. How would you play autos as well as cement?
So first on autos, Nigel, while the last month data was positive, some early commentary by the largest two-wheeler company about recovery or the green shoots in the rural market, and hoping that with some of the doles which government might be giving before the election, the rural economy should see some revival, which would help two-wheelers. But if I were to look into the big picture, both the two-wheeler and the four-wheeler, like passenger vehicle, last 10-year growth has been just 4% compounding. And if I were to take a reference point as 2019, just before COVID, both two-wheelers as well as four-wheelers overall volumes are low. This year, the benefit of lower input prices are very much there, and hence we have seen a good margin expansion coupled with the volume growth. That clearly the operating leverage is visible. It was visible in the previous quarter, and we expect in next 2 quarters also that to be visible. So on the earnings side, we expect overall autos to post decent earnings. So while valuations are no longer as compelling as what it was, say, a year and a half back, but I would say still in the current environment, companies which are posting decent numbers should see good interest from the market. So that's as far as auto is concerned. Cement, for last 2 quarters in a row, we have seen a quarter-on-quarter growth in their EBITDA per ton. And I think that's clearly because of again, the same story of lower input costs, particularly the petcoke prices have come off, and that has helping the margins for cement companies. Plus, the volume growth has been pretty strong, and historically, we have seen in a year before the election, the overall environment and as far as demand is concerned from infrastructure construction is pretty strong. In fact, the latest numbers from the state government capex has been also pretty robust. So that augurs well for the volume growth of cement. And I think the margin expansion story will continue. So at an aggregate level, this quarter, the EBITDA per ton was close to, say, 970, 975. We might see it, in this quarter to get into 1,000 plus at an aggregate level. And that should help the cement sector as well. So all in all, both we are pretty constructive on both cement as well as
in QSR, Rupen, how do you pick the winners? Because you have pizzas, you have different types of burgers, they're differentiated by the geography they're serving in. So there is a lot of choice now. So if one has to pick the right one, can you give us some indications on how to go about choosing this QSR theme that you like?
So Rima, here, if you see, again, from a stock market perspective, we are also seeing a deviation between, say, some of the QSRs, especially on the burger side. I think they have done much well, and the pizza conglomerate has not done that well. But if you see the way to look at it, we would say the companies which has demonstrated pretty strong execution capabilities, which is the largest player out there, which has relatively been underperforming the market for last 1.5 odd years. And they are constantly adding a new franchisee as well. So, apart from pizzas, also getting into sandwiches and other stuff. So I think the largest player, which was the big outperformer some time back, but has been a big underperformer. So we would bet into that player, because here we have seen companies which has executed well in the past will continue to do that, and hence our bet would be on that.
Okay, well, Rupen, we'll leave it there. Thank you very much for your time. Good speaking with you. And thanks as always for being here on CNBC TV18. We'll take a quick commercial break here. We're up 125 points. We get you a quick check on what's happening in dealing rooms. Nimesh joins in for D Street Chatter. And of course, after that, our technical expert joins in for quick short-term trading ideas. Stay with us.
IQ Lighting Limited, an Indian manufacturer of LED lighting solutions focused on sustainability and providing low-energy LED products to help India meet its sustainability goals. Initial public offering of equity shares of face value of 10 rupees each through the book building process, with a price band of 270 rupees to 285 rupees per equity share. Bid offer opens on Tuesday, June 6, 2023, closes on Thursday, June 8, 2023. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead manager, and the stock exchanges.
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं। जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी। सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी? हमने वो भी पहुंचा दी। कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया। बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए। मुश्किलों की नहीं सुनते, हम करके दिखाते हैं। अदानी, हम करके दिखाते हैं।
I am slow. I'm a tortoise. But your wealth managers, they shouldn't be as slow, you know?
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. Well, the Australian team is still to get off the mark. The Bulls, though, they are on fire today. They've hit a century, and now the Nifty Bank as well, that was underperforming, that as well is up close to around 100 points. Well, a good time to get in Nimesh to tell us what he's picking up on D Street Chatter. Nimesh, a good session. It seems the Bulls, they're saying tomorrow maybe we'll hear a dovish RBI governor, but we want to price in some of the good news today itself. What are you picking up?
That's right, Nigel. So, good day, strong, strong moves, and that too backed by big volumes as well. So, today's up move is backed by higher participation. That's the overall feedback. Even yesterday when the markets were down, the feedback was the flows are mixed and with a positive bias, and that seems to be the trend today as well. What is surprising is this big move is just one day before the RBI policy. And that too now, if you look at the sector participation as well, some of the underperforming sectors are not doing a bit of a catch-up exercise. So the OMC stocks have done well today. So is the case with some metal names as well. And FMCG is well bid. So that's one space which is doing good as far as the flows are concerned. But the big the strong point is that there is the big participation in the broader markets. The mid-cap index is of 1%, and a lot of stocks are hitting upper circuits as well. So clearly there is momentum now in the broader markets, and that's playing out in many sector stocks as well. I guess the other space is the rate sensitives. While everybody is expecting a dovish commentary as well and a status quo policy, the rate sensitive sector stocks are doing very well in today's trade. The real estate names, the auto names, all are buzzing into it. So net, a good day, strong participation from large institutions, and there is now catch-up happening in many of the underperforming sectors.
Nigel, Nimesh, in terms of individual stocks, where is the buzz?
Well, Prashant, in terms of individual names, the first stock on my list is Shriram Finance. A very strong indication that a large block is likely to come in Shriram Finance very soon. Remember, there are two large holders who can potentially sell. One is the private equity investor and one is Piramal Finance. So, Street is anticipating a large block in Shriram Finance very soon. So, that's the first one. The second stock is Devyani International. We've seen a bit of move in the QSR space. Now, a bit of catch-up happening in Devyani International as well. Strong volumes and and the indication is there are strong buy flows as well at a leading FIS. So, that's second one. The third stock is Zensa Technologies. Again, the stock is at a 52-week high. Within the mid-cap IT, this has been a big outperformer. And even at these levels, some funds are looking to chase this stock. So again, the volumes are going to be quite high in Zensa as well in today's trade. And the last stock is Manappuram Finance. Again, this is one stock which has been in the news of late, a bit volatile as well. But I believe in Manappuram Finance, the feedback is one of the leading long-only fund was a big seller, and that seems to be quite over now. And hence a bit up move in today's trade in Manappuram as well.
Okay, thank you very much for that, Nimesh. Manappuram is outperforming its closest peer, Muthoot, quite handsomely today. Muthoot is down, while Manappuram is up nearly 3%. Rahul Mohinder is with us to get us a few BTST calls. Rahul, what have you made of this surge to levels above 18,700? We're holding on to those levels. Is there a trade? Are you sensing some sort of a breakout of the range? And your individual stock recommendations?
I think the trajectory, as I mentioned before, continues to be fairly solid, and one has to play it on the buy side. On the downside, as I mentioned, 18,450, that's the number to watch from a slightly broader and bigger perspective. To take away from the takeaway is clearly positive from today's price action. Heavyweights look strong, but let's look at two individual names which I think at this point could be bought. One is TCS. I think technology, I would agree, is one of those sectors which can claw back in a good way. So even on the short term, if you're just looking at the near term, 33.10 would be my target on TCS. But I finally expect the stock to move to about 33.70. Keep a stop loss at 32.30 when going long on TCS. Sun Pharma, another stock, the last couple of days have been excellent. And I think the going should be good. For those trying to look at the near term, we could possibly make near-term highs, keep a stop loss below the 1,000 mark. I think we would head to about 1,040 if we're just looking at near term.
Okay, all right. We'll leave it there, Rahul. Good speaking with you, and as always, appreciated your time here on CNBC. Well, things are looking pretty solid. 126 odd points, no shakeout, no confusion, no nervousness. The index is, as we've been pointing out, less than 200 points away from the all-time high. The Nifty, that is. Suzlon is up 17% now. We had the management with us, by the way, last week. I think it's been, ranged around the 11, 12 odd rupees for a while. Is this now starting to break out? We'll see. But it is by far the biggest volume-led gainer today across the board on the NSE. So that's quite something. But there are so many names, right? Look at something like a Max Healthcare, which is up 7%, 560. Strides we sort of discussed with Ekta earlier. Look at Texmaco Rail, which is up 10, 11%, 67. Huge volumes. Nava, which is erstwhile Nava Bharat, that's up another 10%. 292 on that stock. JBM Auto is up 9%. SJVN, Satluj Jal Vikas Nigam, now 6% higher, 38. Rosari Biotech is up 6%. CRISIL is up 6%. It goes on and on. Global Spirits, Inox Green in the 7% range. NRB Bearings had a big day yesterday. It's up another 7% this afternoon. So the list of winners in the broader market is truly, truly impressive. Mayuresh Joshi is with us, Head Equity Research at William O'Neill. Mayuresh, you look at these stocks and you look at your portfolio, and if you own a lot of these stocks, or maybe even one or two, you feel happy. Otherwise, there's some, I'm assuming, serious sense of FOMO being created out there.
Afternoon, Prashanto. Absolutely. I think the broader markets have been on a roll. And what we've been seeing specifically in terms of either result reactions or any announcements related to a particular company in general, or sector announcements, which probably gave a lot of tailwinds, like wind companies that you were just speaking about. I think the move in these stocks is humongous. So yes, I think anybody who has a clutch of these names will be extremely happy at this point.
Mayuresh, Suzlon was a forgotten stock. It was shunned by investors. The stock price was languishing in single digits. But now investors are also taking note of it. Early in the morning we had Ashwini Agarwal of Demeter, and he didn't name stocks, but he did talk about how wind, energy companies are getting fairly interesting, and particularly on Suzlon, he spoke about how the recent fundraising, the restructuring program, has improved their balance sheet quite considerably. And I was taking stock. The debt on Suzlon's book was 13,000 crore rupees in FY20, and it's come down to less than 1,200 crore. That's a big decline we've seen in the debt price. 13,000 crore FY20 has come down to 1,180 as of FY23. And plus there have been, government schemes like, I think Panchamrut, which are promoting the use of renewable energy. Are you now going to start looking at names like Inox and Suzlon?
Afternoon, Rima. Oh, yes, I think names like an Inox Wind, Inox Green have started appearing on our filter lists at Kunil. Two, three things, as you rightly pointed out. One, I think in terms of the entire perspective related to renewables, 50 gigawatts expected to get added over the next 3 to 5 years. I think that is probably the target setting, wherein 10 gigawatts will be towards wind itself. Now, the details in terms of the contours on what is probably expected to happen, e-reverse bidding expected to get off, which means better tariffs. You're probably expected to see all the 8 wind states probably get a fair share in terms of construction happening at their end. And therefore, with the removal with the removal of the interstate charges as well till 2032, a lot of new projects will come on stream. Now, what happened really in the period between 2015 to 2020, tariffs were lower and input costs were far higher, which created a huge dent in terms of a lot of these wind company balance sheets. But really, I think with things expected to change, with new policy regulations expected to come through, a lot of capex expected to come through from corporates, and a lot of order wins expected to come from state regulators as well. I think we're expected to see a fair share coming to these companies itself, which improves their cash flows. And obviously, with better dynamics working onto their balance sheets, the return ratios improve as well. So I think a couple of these stocks, Inox Wind, Inox Green, have started appearing on our filter lists. But along with a lot of these ancillary players, Rima, have also started moving in tandem. You look at stocks like a TD Power as an example, which probably gives generators, turbines for renewables, both thermal and wind and solar players as well. Players like an APAR, for example, which had a humongous run over the past 12 to 15 months, which does a lot of work in terms of wires which are related to the renewable space itself. So I think a lot of the ancillary players are also moving in tandem with the core players itself.
All right, and Mayuresh, that APAR Industries, I promise you and I promise our viewers in the next 10 days or so, we'll try to feature the management on our channel itself. It's been a big outperformer, a bit of an ancillary play to the power sector on the whole. And, as that chart indicated, a big uptake is what you've seen on that stock. They're into conductors, cables, as well as tea oils. But Mayuresh, stay with us. We are tracking the World Test Championship. India versus Australia. India's put Australia into bat, and we've just picked up a wicket. Good time to get in Mr. Srinivas Rao, sports editor of Network 18, who joins us on the show. Srinivas, so what are you making of this decision to put in the Aussies to bat and also leaving out Ashwin? Your take.
I think what it reeks of is a strategy. At the moment, right now, what it tells me is that they didn't want to risk it batting these first 3 hours in conditions that are usually overcast. That's been the weather pattern here. So what it happens is after the first 3 hours, the sun begins to come out and, conditions tend to ease out a little. So clearly what India has done here is trying to make the most of those first 3 hours. And yes, that's what you saw in the first wicket that Australia lost. and India will be hoping to do a little more of that in the next 2 hours before the sun comes up.
You know, Srinivas, I thought when you said that we're celebrating something, I was hoping the second wicket went down. But we'll have to be content with the first wicket down. And, you know, the boys have bowled in a good first 5 overs. But, Srinivas, tell us more about how's the atmosphere out there. You know, we're getting used to this 20 overs, but this is the real deal, right? Test cricket. That's the real challenge.
You have to keep reminding me that I'm at the Oval in London. Because if you stop doing that, I'm going to assume that I'm sitting in a stadium somewhere in India. Because this whole ground looks packed by Indians. And that's what it is. I mean, this is the India versus India final that is going on here at the Oval. And the home support for India is massive. It's huge. So the home support is huge. And, well, India's got all that they need. I mean, they won the toss. They've got the crowd rooting for them. And they've got the combination right.
And we've picked up a wicket as well. Srinivas, thanks so much for joining in and giving us that quick update. You know, at times during that conversation, I thought we were picking up 2 or 3 wickets, but it seems with the kind of support that we have out there, even the dots are being cheered. And, you know, I think for the first couple of overs, there were no runs that were scored. You have a good time. We are envying you. And let's hope India comes out on top in this one.
Thank you.
For the time being, we'll get back to markets, slip into a short break. You come back. We'll keep the scorecard updated as well, and we'll wind down the markets for you on the other side.
ट्रेडिंग shouldn't feel like this. इसलिए हमने बनाया ICICI Direct Flash Trade, जो देता है clutter free experience, quick entry और exits, live tracking के साथ, सिर्फ ₹7 per order. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं। जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी। सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी हमने वो भी पहुंचा दी। कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया। बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए। मुश्किलों की नहीं सुनते, हम करके दिखाते हैं। अदानी, हम करके दिखाते हैं।
बालकनी
सेम है,
ड्राइंग रूम
भी सेम है,
किचन एरिया
सेम है।
हमने लिए 90 लाख में, आपने लिए 80 लाख में।
ये सेम क्यों नहीं?
क्योंकि आपके और हमारे होम सर्च ऐप सेम नहीं है। जानिए प्राइस ट्रेंड्स और सही ट्रांजैक्शन प्राइसेस ऑन 99acres.com। घर लेना हो या बेचना, 99 acres से ही पूछना।
कोई फायदा नहीं कोई जरूरत नहीं भाई।
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Welcome back. Well, the headline index is up nearly around 140 points, but just take a look at the broader market strides. We discussed that stock earlier. Now it's up close to 11%, so it's building on those gains. Torrent Power as well, it was up close to 8-9%. It's an F&O counter. I'm not sure whether there's been a big short covering bounce that's played up out there, because the last 5% has come in the last 15 minutes. Big up move is what we're seeing. I think the high of the day was around 710 or thereabouts. So that's one stock that you should be keeping on your radar. But let's talk about a couple of other names as well. Tata Communications has moved higher. Mayuresh, any view on this one?
So frankly, I think have not been tracking this one. But at O'Neill, I think we've got a couple of stocks which we are probably keeping on our radar at this point of time. AI engineering, I think the numbers were very decent, Nigel, in the quarter gone by. Our own take in terms of volume growth should be reasonable for the next year as well. Expectations in terms of margins coming off a tad bit with input costs coming down will still mean that with improved volumes, operating leverage plays onto the balance sheet, more than 750 crores in terms of orders. I think this is one stock that we probably like. And within the same space or the same breadth itself, ITD cementation, I heard the management interview with you, Nigel, a few days back. Our take in terms of the growth that they are envisaging for the next financial year in terms of top line, more than 35, 40 odd %. Margins expected to improve quite significantly, decent amount of order book, and improving cash flows should probably keep this stock in good stead as well. So I think financials within that NBFCs, a few of these domestic cyclicals is something that is propping up on our sectoral rotation.
Any thoughts on Team Lease, Mayuresh? Do you look at that company?
Yeah. So I think the expectations in terms of hiring expected to continue at a reasonable pace. The numbers have been pretty reasonable so far, but the expectation in terms of dynamics expected to improve if you've got a longer term horizon over the next 2 to 3 years with stable margins. I think that is something that probably should keep the stock in good stead. Now, what really will be a defining factor will be how the first half probably plays out. You've seen a lot of traction that was probably happening a few quarters back when it came to the IT sector as a whole. But outside IT, again, I think things are picking up slowly and steadily. And therefore, I think the core services business should improve, leading to better numbers going forward. So I think Q1 will be a defining factor. The stock has been under pressure over the last 1 year, and therefore Q1 numbers will be a defining factor. Obviously.
All right. Thanks very much for that, Mayuresh. Good speaking with you. Thank you for your time. 3 minutes to go for market closing. It's another super day. And the question, in a way, on a lot of people's minds will be that will we get to the new high tomorrow? I mean, if the momentum is good, the tailwinds are there, who knows? But tomorrow is also the RBI policy in the middle of the day, and actually in the first half of the session. We'll see. I guess somewhat dependent on that. But we leave with a 150-odd point gap between where the Nifty is now and where the all-time high is at. Small caps, if anything, extended gains in the last 60 minutes. We end up 1.3% higher, and the mid-cap index also ends about 1.1% in the green. But I'll get to stocks a little later. Large cap gainers, Britannia, Tata Consumer, FMCG, Nestle. So FMCG did quite well, actually. And then you had BPCL, we highlighted oil marketing. And then you had a HDFC Life and a JSW Steel. These were the top gainers, at least on the Nifty index. Prima.
So, the mid-cap index has been gaining now for the 13th consecutive session. And yet again today, it's gone ahead and hit a record high. So the up move in the broader markets continues. Another notable feature in today's trade is that the banks underperformed. So the Nifty Bank closes up in the green with a gain of about 0.25%. But the gains are muted compared to what the frontliners did. And that's courtesy Kotak Mahindra Bank, which ends at the day's low. Kotak Mahindra Bank was down nearly 1%. ICICI Bank tried to recover in the second half of the trading session, but still closing in the red. It's the FMCG names which catch your attention. So Britannia, Tata Consumer, Nestle, higher in trade. And on the mid-cap end, there were so many individual names, right? Double-digit gains seen for Suzlon, Torrent Power, Stripe, and plus these railway companies. Well,
that's right. Rima, if you look at the headline index, celebrating the 130 points, I'll tell you what, from the broader markets, there were plenty of stocks that did very, very well. PPAP Automotive, well, that one was up close to around 18%. These are not names we talk about very, very regularly. Torrent Power, that was up close to around 15%. The last 6% came in the last 1 hour or so. You had Suzlon as well, post a large trade that took place in the final hour, 1.5% equity change hands. Snowman Logistics as well was up close to around 10% in today's trading session. So that as well did very, very well. Shimaru was up close to around 10%. Imagine so many stocks going up 10% in a single trading session. So big move is what we're seeing. And some of those stocks that have actually been big value eroders, whether it was IFCI, that stock is well up close to around 7%. I think you're getting to a time now where you have to be a little selective about some of these stocks. But clearly it was a very, very good day for the mid and small cap index.
And the advanced decline ratio also firmly in favor of the gaining side. So we had about 2,000 stocks in the green for 1,000 stocks in the red. There goes the bell. and it's a solid 130-point rally on the Nifty, 18,700 plus, 18,730 on the Nifty to be precise. But remember, tomorrow is the RBI monetary policy, so that can change the direction on the markets. With that, it's a wrap and closing bell. Thank you very much for watching. On the other side, we'll get you an exclusive conversation with the Chief Economic Advisor, V. Anantha Nageswaran, on our special show, Indianomics.